Welcome back to the show. This weekend, we have Darren Hudson of Texas Tech University, as well as Tommy Grisafi of Advanced Trading joining us this weekend. Tommy, when you look at the markets and the price action earlier on the week, it seemed traders were really trading on the fact that planting progress has been slow. But Tommy, it's not like we're that late. It's still April.
Right. April showers bring May flowers. And in some cases, April snows might bring May flowers up north. And you have to keep looking at the drought map. And if I'm seeing this right, the drought map's getting smaller. That's not what the bulls want to hear. The bull wants to be fed every day. But if we need moisture to grow a crop, we may not get it in the exact date you wanted. And all these guys posting pictures of planting soybeans in April and earlier months, they may not get them. They may have to use last year's picture on their phone. But we will get the crop in. There is such a large motivation to get the crop in. And when you talk about prevent plant's based on the spring price and the fall price, or where the markets are now. When you talk about states that could have prevent plant time, we are such a higher price that there's such a motivation to plant something. It may not be the exact thing you want, but the farmers will get it planted.
Yeah, so as we see how the lack of planting impacted prices earlier in the week, there are concerns where you are, Darren, around that Lubbock area. It is so dry. We showed pictures last week. It looks more like the Dust Bowl. So, just paint the picture for us. How dry is it, and how could that impact specifically cotton production this year?
Well, I think, it's safe to say it's probably one of the driest on record. I saw a swath of about 16 counties through the central part of the plains that least amount of moisture from September to May on record since 1895. And the rest of the area is probably in the top 5 driest since 1895. So we're going into this situation. And it was dry last year, but we had subsoil moisture starting out the year. So there was something there to grab a hold of. This year, it's just not there. And, basically means we're going to have a lot of planted acres out here in cotton. Don't know how many harvested acres we're going to have. The irrigated probably has a shot. The dry land right now, unless we start getting some rains pretty quick, it's going to be brutal.
Yeah, and when you look at the price action, though, Tommy, is there anything to learn from this week? I mean, any little issue, any little hiccup seems to be fueling the market. Do you think that is a trend that will continue?
Well, we're going on 2 years of this bull market. It was upon the viewing of this, we'll go on the 2-year anniversary of crude oil trading negative 37. And bull markets don't always last too long. 1 year is awesome, 2 is great, 3 is hard to do. And so the markets are sending out, the lesson we learned is that the markets are sending out a signal for everyone and anywhere in the world who can be involved in agriculture that it's profitable. And as we know, we're old enough, and even you're old enough, time to remember how awesome ag was in 08 and 12 and how the whole world got involved. And the truth is, they haven't got out of it. So we're going to get a lot more people involved in markets and growing production when the prices come down. That's the billion-dollar question. We're going to go from massive profitability to not profitability again. This isn't new. I didn't just make this up. This has happened. Boom bust periods have happened in agriculture over and over. So we had a rising market into exploding interest rates, into inflation. We're going to have a harvest that comes right into midterm elections. And if this is anything like crude oil, not that we have a strategic grain reserve or strategic fertilizer reserve, but it's going to be a very politically motivated reason to talk down food prices as we come into election season and harvest time.
There's been a lot of commodity prices that have just been mind-blowing to watch, but cotton is one of those, Darren. Is it just the supply and demand right now that has caused cotton prices to be on such a run? Or are there some other factors right now that are at play in this market?
Yeah, I think there is a sort of a current supply-demand imbalance. If you look, for example, there's roughly about 14 million bales of cotton out there on call contracts that are unfixed by textile mills. So there's still a lot of buying left to do. And then you couple that with weather and the supply constraints that we're looking at. You're talking about significant upside potential still in that market. Most of that's priced in at the moment, but certainly weather is going to change things. And then you couple that with India just announced it did away with its tariffs on imported cotton, which caused a pretty big dislocation of cotton moving into a potentially new market. So I think all those things together are what's fueling this. And the supply uncertainty, I think, is part of it. But it certainly, if you look out into 23, prices are still in the high 90s and sort of trailing up behind the current contract. So it's indicative of a market that's still well above long-term average for those prices. But at the high 90s, if fertilizer prices don't break, as Tommy indicated, we're right back into a situation of no profitability.
All right. Well, Ukraine's ag ministry did give an updated forecast on planting there. So how is that uncertainty also impacting prices? We'll talk about that later.